All right, it's getting colder. You might feel like getting warmer. We're talking vacation stocks in today's Hot Picks. We've got Sylvia Jablonski, the CEO and Chief Investment Officer of Defiance ETFs. Thanks so much for joining us, Sylvia. We know that travel is all anybody wanted to do post-pandemic. Where are we in that cycle? Is the appetite still as high, as robust? How are you thinking about it?
Good morning, and thanks for having me. Well, it seems like people still want to keep traveling. So if you look at the different types of companies and components that make up the leisure sector and some of the different stocks that participate there, most of them, whether it's hotels, airlines, cruises, or related names like that, are saying that they're getting pretty close to pre-pandemic levels. So they're getting up to that 80 to 85% number. And what that tells us is that people are out there, they have the appetite to travel, and that the revenge travel trade is still actually working. And the other interesting thing is the feedback that we're getting from the CEOs is that they have pricing power. So they've increased prices and the consumer continues to spend sort of regardless of the fears of the recession and what will be in the market.
Let's talk about one of those CEOs that has been optimistic about where things go from here, the head of Delta Airlines. It's one of your hot picks. What do you like here, and what do you say to people who are nervous about picking up airlines on the eve of a recession?
Yeah, absolutely. It's always tricky, timing when to buy some of these stocks. But if you listen to the outlooks of the CEOs on the earnings calls, they're talking about seeing 10 to 15% margin growth. They're looking out to 2023 and they see increased bookings. They see projected increased revenues coming their way. So a company like Delta that's incredibly well run, has a strong balance sheet, is really going to benefit as business travel reopens fully, as leisure travel continues to pick up, but also as the world opens up and people begin to sort of fly more. And Delta's really benefited from that. So the one downside that they have is actually a capacity issue. So they're trying to get enough pilots and enough planes to actually meet the demand that they have. So they too are in that 85% pre-pandemic range, and they are projecting that they'll be closer to 92% by the end of the year. So that'll be, a good tailwind for the company.
So there's airlines, but there's also hotels. And I just remember in the depths of the pandemic, Marriott, almost went to zero, not quite, but almost eviscerated in stock price over a short period of time. It's amazing to see it's clawed back to above where it was before the pandemic. But now that they're here, what is the catalyst to go even higher?
Yeah, great question. So they've had an incredible run. They've outpaced the S&P 500 last year. They're certainly doing that, to date this year as well. The catalyst for Marriott actually is going to be, I think, the reopening of the entire world. So, China had essentially the zero COVID policy, and much of China was sort of shut down. And in the region in general, travel was incredibly light. So Marriott is a global company. They have over 8,000 properties. And I think that they're going to benefit from two things. One, the pickup in business travel, which is at about 70% pre-pandemic, and two, the reopening of international airspace and international travel and things like that. So all of these people that are flying, Delta or other airlines to go somewhere have to stay somewhere too. So I think that the benefit of the reopening of international borders and COVID policies is really going to continue benefiting Marriott.
And talk to us about the cruises as well. Always an area of travel that I was skeptical of if it was right for me. The pandemic kind of sold me on it's not right for me, but others have been booking trips. And your top pick in the cruisers is Norwegian. Why is that?
Yeah, so Norwegian, of all the cruise lines, is sort of catering to that higher end customer. So they actually aren't going to be particularly impacted by a recession for the most part. They see bookings up. They're at 80% capacity pre-COVID. They're seeing spend on the actual ships pick up. So they're looking for increased revenues of 15 to 20% next year. They got a good boost from positive reviews from Goldman Sachs recently put out a piece for them as well. But I think that Norwegian is a story of smaller fleet, lean and mean, well capitalized, and they're really targeting that higher end consumer that sort of isn't going to be impacted by the recession. So they're almost like that LVMH story, although that's a different sector. It's appealing to the right client.
Now, this in contrast to Marriott, which has made back all of its post-pandemic losses, Norwegian is still a shell of its former self. Why? And do you think it can get back to that former glory?
Yeah, I think it's to the point that you made, right? COVID kind of, if you weren't a cruise person in the first place, COVID certainly didn't
Helps that.
encourage you to yeah to go out and book a ticket, right? So I think that that's part of it too, and it's just going to take some time for that to shake out. But I think that as people who are sort of cruise people get back to these experiences, these types of companies are offering all sorts of incentives, and they're finding that once people kind of like get on their cruise ship, they begin to create new bookings, they begin to spend money, and I think it's just a matter of time. It's just the area of travel that was sort of hit the most, but it's incredibly important, and I would say it's probably the deepest value trade of the three.